Okay, welcome everybody to this evening's XAUUSD webinar, live forex market review. My name is Duncan Cooper. Welcome. Before we get into it, if you can read through the risk disclaimer. If you're on a YouTube live stream, I can't see the chat, but you're more than welcome to join. If you want to chat to us, just follow the link that I've given you there in the chat to come into the webinar room, and then you can ask me questions. Other than that, you're more than welcome to watch. All right, so everybody, please read through the disclaimer before we get into it. And of course, early in the morning, we had the FOMC statements. US dollar has been weakening. Some pairs moving up a lot stronger than others. Euro dollar, pound dollar been moving up very strongly. However, the likes of the Aussie dollar and New Zealand dollar, not too much. And dollar francs just moved down to a very key level. All right, so let's get into it. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor at ACY Securities. I am a full-time trader. I've been trading the market now for more than 15 years and mentoring clients for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And you can connect me through the week at our website, acy.com market news tab, at our YouTube channel, ACY Securities Australia. And you can connect with me on Twitter and LinkedIn. Hello there. Somebody's saying hello to me there in the chat. So if you want to connect with me through the week, any one of those four opportunities there. And as well, we've got our Telegram channel. If you want to get access to that, just contact Nathan.bray. We're providing analysis through the week in there. Almost 7 days a week. Not quite 7 days a week. Probably 5 days, or 6 days, but I'm not spending 6 days providing analysis. But there's content going in there 6 days of the week. All right, so if you want to get access to that, just contact Nathan. I'll put his details in the chat right now. If you want to get access to my chart layouts and templates, then for MT4, simply contact Nathan too. His details are going in the chat right now. And as well, if you've got any questions about opening an account, this is not a sale to open one, but if you do have questions, then just contact Nathan. He'll be more than happy to help you out with your questions. All right, now let's get to just what's coming up in the news for the rest of the week. We just had the Swiss interest rate decision, 50 basis point rise. We had 25 basis point rise for the US. We've got the UK interest rate decision coming up at 10 p.m. These times are Queensland time. Expecting a 25 basis point rise there. 10:30 unemployment claims. And then tomorrow from the Euro, from the UK, and from the US, we've got their flash manufacturing and services PMI data coming out. You can head over here and grab the times for yourselves. And notably on the weekend, daylight saving is changing in the Eurozone. All right, so all those things are worth noting. Just go to forexfactor.com, set this to your time zone, look at the red items. So interest rate decision really is the big item for the UK now coming up at 10 p.m. So let's get into the charts, and I just want to have a quick look first of all at the dollar index. Now, I was discussing that we may pull back to the 62 level in this area of daily chart support. Now, of course, we've spiked down through there a little bit, down to the 79% level of the weekly range. Excuse me one moment. All right, sorry about that. I was going to sneeze. Now, this range that I'm talking about is the weekly range. Let's just go to the weekly chart. And we do have a higher top here. And we, of course, we're pulling back here. And we could just simply keep trading down, down, down to a fresh low. But it is worth noting that you might be looking at the day chart thinking this is going down. But it could stop at the 79% level here. And then turn around and move back up to the high and move above the high. So that weekly trend, whilst relatively range bound, is fractionally to the upside with a higher top. All right, so just be aware there we're pulling back to the 79% level, because as we get to the euro dollar, you'll see that we've actually rallied up to the 79% level of the range of last month, February. All right, so this day trend is down, but we are at very discount levels on that weekly range there. So don't be surprised to see this start to pop back up. Does that pop back up start to, become more of a pop-up? So day chart trend is definitely still down here, but, it is overextended. It's at discount levels at 79% fib there. I wouldn't be surprised to see this move up in the short term, back up to 103.40, which is the old monthly tops that we've discussed before. Monthly charts, it's these tops here. So we were above, we've sunk back below. And can we actually get back above those levels? Oh, sorry, the 130.40 level is the weekly level of resistance. The monthly level up there is at 103.82. So there's a weekly low here that we've moved below, and 103.82 is the monthly level. So if we are going to see a resurgence of strength from down here in the 79% level, we need to move back above those levels. All right, so monitor those resistance levels. If we do start to rally, do we hold underneath? Do we move back above? Somebody asked me for the NAS 100 and SP 500. We'll get to those a little bit later, or we might get into those right now. I'm going to do the S&P 500 right now. This day chart range that I'm monitoring, we ride up to 79% level yesterday and then dropped. So that looks a little bit negative there. I probably anticipate there that this is down with the trend. This is correcting, and we could be seeing a move down. So even when we had an interest rate hike, of course, but also, of course, the Fed also said that maybe we're getting very close to not hiking anymore, even though that wasn't what they were saying 2 weeks ago. But so the hike is negative for the stock market, but if we're not going to be hiking anymore, that could be assessed as positive for the market as well. So negative reaction there from the stock market. Can it follow down and through? On the S&P 500 there, trend is down there on the daily in terms of the big swings. I can have a look at the Nasdaq now while we're talking about stock markets. All right, so very much like the S&P 500 in its monthly picture, this is a lower bottom. Potentially, are we going to put in a lower top? I'll be monitoring that range. Almost a 79% retracement up there. Day spike up there. So the weekly trend here is up and your monthly trend is down. So there's a bit of a mix there, but overall, if you want to look at the most dominant trend, the monthly trend's down. This is all corrective up at the moment, and we could be forming some form of double top up here, just short of the 79% retracement level. In fact, a triple top. See, there's another top over here. All right, all that area. Possible triple topping up there, very negative rejection. If we break the low of the last 2 trading days, because they look kind of equal, that would probably maybe, look to confirm the possibility there of a reversal and a double top, a double top or a triple top, but in this more recent price action. Breaking the last 2 trading day lows would maybe start to confirm this as a double top. It's not really a true double top until you can break the midpoint down here, but it looks like right for reversal at that level at the moment. Okay. All right, so that's what's going on. I would say with the dollar index moving down, but indices still moving down as well. So I'm not unopposed to seeing that dollar index pop back up from that 79% level. With the fact that we've been moving back down from a higher top on the weekly chart just. All right, I want to go to the dollar franc. I put this out on Telegram today. Now, over the last week, I've been discussing this as a potential double bottom down here. All right, and we had a nice move up from down here at monthly support 90.84, big impulsive move up, and then we've pulled all the way back. And of that move up, we've had the 79% level there. Okay. In terms of the double bottom, if we've got a double bottom down here, double bottom target is all the way up at 98.04 if we can get up there. But at the moment, we're still within the range, pulling back to the 79% level of the smaller range and the larger range there. So I'm going to get rid of that other fib just here. Don't need that for the purpose of today. But, you know, be aware that there's the potential of that double top there. Sorry, double bottom here. They could be coming into fruition over the course of the next, you know, months. All right, so price can often go up and then it comes back down onto the back foot again. Is it going to form another higher bottom here, which is higher to this one? All right. Now, for our charts, this is the range that I've just drawn in. I can get rid of those blue lines just so it's not too messy. This is last week's whole trading range where we rallied up from supports, starting to maybe show a double bottom. 79% retracement at the moment. We're just holding on day support from over here. This is a perfect level to look for. If you think it's a double bottom, this is a perfect level, 79% retracement, to be a buyer. Stop below the low here with the anticipation that we could have another move up, come up to challenge these highs and continue up in the direction of the double bottom. All right. Now you could trade right now, stop below the low here, trading as a 79% level at support, or you can wait, look for more confirmation that price is moving up from there, so you can work that out yourself. We had the 4-hour trade entry lesson yesterday. Slavy said you were taken out. How are you? I don't know how you were taken out, but this is where we should be getting in, isn't it? Or were you at break even and it's pulled back and taken you out? A break even kind of thing. Because I recall you saying you were in last week. So, you know, you could be waiting for a 4-hour trade entry here. What does the next 4-hour candle do? Does it close up? Then does price break above that candle? All right, so you made a small profit. All right, well, you know, it's either going to hold or it's not. It's like when you got in last time, it's either going to hold or it's not. You just don't know, do you? You don't know until you take the trade. It does look like a very nice setup. So it's there. You can be waiting for a 15-minute chart here to show an uptrend, or at least a reversal of trend with a trend line break. As I'm talking, it's trying to trade back above 91.37 at the moment. So you can make your decision down there. Do you think that's going to hold? Do you want to trade down there, or wait for some more confirmation? Now let's head over to the euro pairs, euro dollar. Now, of course, there's no argument at the moment where the day chart trend is. All right. And in fact, there's no argument where the weekly trend is. We have actually potentially put another higher bottom here. But the question is, and I've been discussing this since the start of the year, this is the range of the whole year last year. So look at that as a candle for the year, that whole range, and we're trading inside. We've traded up inside the candle last year, right? For those that are maybe new to the webinars, I haven't been discussing this probably over the last couple of weeks, but that's the candle of last year. So we've got a fraction short of the 79% level, and this weekly trend is still up, but the monthly trend, if I drop to the monthly chart, is down. All right, lower top, lower bottom. So all this upward monthly movements up is against the overall bigger picture. And that is the range of last year. So there is still the question that are we topping out? Had a very negative February. I think we just broke the lower Feb just. So pretty much we're trading all the way back up inside February at the moment. So whilst we may have just broken the lower February, the whole range is there. So if we have, this is the terminal top for the year, which I've been thinking it is, but of course we've been moving up excessively strong. We're hitting today the 7% retracement level of that move down, and this day chart resistance over here that we false broke. This big false break before collapsing. We've tagged that area today. There's two tops there, 1927, sorry, 109.27 and 109.29. And we've been up to 109.29. So you could, to some extent, say maybe this could be a left shoulder head. And are we in the position here for a right shoulder to form at the 79% level? Now, it's very clear. There's no argument. You know, if there's 100 of us here looking at the day chart trend, it's clearly up. All right. I mean, you could be aggressive and be selling right in this zone. If the trend continues up, of course, you're going to be wrong. But you can just, first of all, take stock of the position of the market. Is that a head? Is that going to be a left shoulder here? All right, and is a right shoulder going to form there? So you don't have to engage right here if you don't want to, if you don't want to be too aggressive. We are filling at the 109 level at the moment. Or you simply wait. And from the 4-hour trade entry technique I showed you yesterday, if we break that candlestick low, that is the 4-hour trade entry, okay? Having hit that 79% level up there and the day chart resistance, the left shoulder area. Now, I don't know if this is going to be a final top. We need a lot more information to actually determine that it will be, but depending on your risk profile, we're breaking the low of the 4-hour candle. You could be just selling, stop above the high. And, you know, that's going to be risking about 40 pips. 40 pips for a long-term move down. Let's say we can move all the way back down to where we came from. 40 pip risk. That's 1 to 10 risk to reward there. Now, I don't know if it's going to come down to this low area down here. I don't know if it's going to move down another 50 pips. I mean, it might turn around during the course of the day and then suddenly take out that high. But there's the 4-hour trade entry. Now, you may want to wait for, you know, some structure here on the 4-hour chart to kind of form, where it might pull back, it might come up and put in a lower top. And then, you get a little bit more confident. I mean, what it could do here, we've false broke that 4-hour top. So it might come up at some point for a rally and stop at that top. And just form a very small kind of left shoulder head, right shoulder up there on the 4-hour chart. But as I'm talking, it just keeps sinking below that 4-hour candle. So, you know, as I said before on the DXY, Slav, you're telling me there in the chat, it does look good. The DXY dollar index is at the 79% retracement to the downside. Eurodollar's at the 79% retracement to the upside. Are we seeing complete correlation here and reversal? All right. It all depends how much information you need to pull the trigger. All right. All right, so it's worth noting if it does start to pull back from here, we're still in an uptrend in terms of structure, and we may only pull back to say 107.59, this top here. All right, but it does look like a very nice level. I mean, if we do fail there, simply from that running down to there, let's say this is just all corrective, then we may well see a downtrend continuation from that level through support to 127 extension, the next leg down. Was this the first leg down? Is this corrective? And are we going to leg down that way? All right. So it just depends how much information you need to maybe trade the potential of that. Over the next 3 or 4 days, we may just plow straight up and take out that top. And then what I'm talking about now, isn't going to come to fruition. But it is very correlated with what we're seeing on the DXY, 79%. So you can monitor that and work out how you want to trade that or not. You may be looking to the long side. So wait for this 4-hour pullback to finish. Look for a setup to buy, to trade back up. All right. But it is, quite overextended there. So I can see an imbalance. I can see more than one imbalance on all the way back up there. Most immediate imbalance that's occurred this week. Even if we just trade down to fill an imbalance, there's an imbalance in here that potentially could get filled. So that's just moving them price down to at least about the 1,800 level. All right. Euro yen. Now you can see how I've drawn my fib. Lower top to bottom here. About a 79% hit and a rejection yesterday. Drop it down to your 4-hour charts. We are moving up from a lower bottom. This looks like it's just rallying back up inside yesterday's rejection. Hit the 62 already. And maybe it's starting to reverse down from that level already. So if that strongly reverses down, that's going to favor, in all probability, a reversal on the euro dollar as well. So, work out if you like that. We haven't had a trend line break yet, but failing at 143 and the 62 level at 143.07, is that where we're putting the high of the day for then to put the candle in to move down for the day. Right? That looks quite nice, that, as a reversal. All right, let's go to the pound pairs. Pound dollar first up. Now, when we were down here at 1841, I thought we were going to start breaking down, but clearly, this is, sometimes it does this. We broke weekly support. I was looking at this as a double top up here, breaking support. I was expecting then a big run down, but support held, and we traded all the way back up. And we're pretty much at 79% levels at 123.09. We're about 11 pips above there at the moment. But we've got the interest rate decision coming out later. I mean, we could move up to the top. We could come up to, we could class this as a range at the moment. Top of the range up here, bottom of the range down here. Or are we going to fail at 79% area here? And there's weekly resistance over here. So weekly resistance at 122.93, 79% fib up there at 123.09. So we're pretty much trading all the way back up inside of February's decline. Are we going to top out up there, or are we going to come up and challenge the 124.47 level? So just, just watch and see what goes on. Now this isn't where I want to buy, because if it is a range, I'm buying at the top of the range. All right. Or this is a new uptrend that's going to break through here. This is quite elongated to the upside at the moment, so I'm not going to buy at the top of the move. All right. I'd have to buy a dip of some form if I wanted to be a buyer. So work out what side of the market you're on here and where you think the overall trend is. As I've discussed, this is the range of last year. That double top failed. Sorry, the range of last year was from that high up here. I get the right correct high. It's that high there. All right, so that's the whole range of last year. And another double top held at the 62% level of that range. So when we were breaking through these lows, I was anticipating we're coming down here, but this weekly trend is down from a point of view of breaking below two lows. We could be in a range like I was discussing, but the weekly trend is down until we trade above this double top. So we're kind of at the 79% level area there, this old weekly top over here to the left. So can we hold in this area over the next week? You don't have to be trading today. You just need to know what the position of the market is right now to understand that we could be in an area where the market might top. And then over the next week, if you start to see a potential of a reversal coming around, then, look for your setup to get short. So I'll be watching the area that we're in right now for weakness and a failure, or up to the top, we could create a triple top at the top. If we trade straight through the top, then of course the trend's changing at the moment from the weekly chart perspective. All right. So this has been quite buoyant with the US CPI data upticking. Came out yesterday. So on the 4-hour chart, we're still in an uptrend there, but you can see at the moment, the last 4-hour candle is negative. We know we're in an area where we could reverse down from. So the 4-hour entry would be the break of that candlestick low, but of course we've got the interest rate decision coming out now. In yesterday's webinar, I said, watch that candlestick low for a break. Now, ultimately, it didn't provide a long-term reversal, but it did provide some profit, or at least you should have been able to manage your trade to break even and not lose any money, So I don't know what's going to happen up there, but we're false breaking yesterday's spike up on the FOMC statement. It would be nice to maybe, first of all, 129.93 is that weekly top to the left. It would be nice to see price action get back below there, first of all. Can it move back below the level of resistance that it's trying to move above at the moment? So if you're looking to the short side, does it then become resistance to move down? Now, you may be bullish and you may be prepared to be a buyer up here at such high levels. If you are, then price may just pull back to there, 122.93, back to, say, 123.00 and hold. And then it may hold there to move up to 124.47 to retest the highs. So it all depends on what side of the fence you are on for the long-term play at the moment. Are we continuing up? If we're continuing up, you want support to hold. If you think we're at high levels here to trade back down, you need to see probably a move back below 122.93 first of all. All right. So moving that down to the 50-minute chart. Of course, there we're just false breaking yesterday's high. I wouldn't be trading this until the interest rate decision is finished, but I can see that 50-minute downtrend is just having a 62% retracement. So, the 15-minute trade entry that I teach, there's a 62 level. You could be looking for the 79% level, and that could trade down from the 79% level at 123.34 down to the figure ahead of 10 o'clock. You just need to work out, do you want to do that or not? But I don't know if I want to be getting in and holding with the news coming out at 10. All right. So we may see a bit of a drift back down as we head towards the interest rate decision. Pound yen's very range bound, very choppy. I've been saying that from the weekly chart perspective, I've been looking at that as the trend down. Trend down, this all corrective. Failed just short of 79. We're back below this weekly was resistance, became support for a week. We're back below it, but it is choppy on the day chart. And if I get rid of that fib, we've had a 79% retracement. You can see how choppy it is. It's back below that level of weekly resistance, but spiked up to the 79% level yesterday. Are we moving down from that failure down? We're obviously holding below 61.80 at the moment. Personally, I don't like all the choppiness that's going on it. So, if I can trade something else, I'll trade something else. But at the moment, it keeps chopping above and below 61.80. If I wanted to engage on this, I would much prefer to see this maybe come back up to there, the 79% fib. And that would then, you could sell there, stop above here, and then that offers a nice risk to reward. I don't see a setup to sell at the moment, not with the interest rate decision coming out. So you could wait and see what the interest rate decision does. Does it run price back up to that 79% fib once more? Do you start to see it hold? it would be moving up from a lower bottom here. You could as well draw a fib in across that range from that lower bottom. So you've got two 79% levels up there that you could monitor. All right, for a move up. Get my right tool. And then a move down. All right, I'm just going to head left to the Aussie yen. Now the Aussie yen had can't break the bottom of the range yet to the daily chart. Now this is the weekly move down from that top to bottom. I'm going to go to the weekly chart. Can't yet break, so I'm looking at that as a downtrend, correction, downtrend. Can't yet break below that level of 87.01. In fact, it hadn't traded down to 87.01 at the moment. All right, so just checking all my questions. All right, nothing there to talk about. Now, I'm looking for a follow through below 87. It can't break it at the moment, and it is still holding, keeps trading below and holding at this low here, which is 88.10. Fraction above at the moment, but still in a downtrend here. Yesterday we had an up day and a down day, closing back below that level. So I'd be monitoring the range of yesterday, which I'm going to do on there's a 4 hour to a lower bottom. We're just correcting back up, but that whole range, I'm just going to draw it on a 15-minute. All right, and I'll be watching the 62% level. See how we were through here, we were holding, and then we broke down. So I would watch that area to be resistance today, and that lines up with the 62 level there. Now, whether or not we can get up there, but I'll be watching, if you want to engage on this pair, can it come up to the 62% level and fail? It may have already failed and not quite got there. Or the 79% level up here. These are the levels to watch in terms of moving back up within the range of yesterday. But as I'm talking, it's obviously selling down. And it's selling down because the Aussie is moving down. Next pair to review. So whether or not that can, you want to get up to a high level. I said this earlier in the week. Try to sell from a higher level. Early in the week, I had a fib drawn at 88.70. To sell approximately that level to trade down. All right, we failed up there yesterday at 89. So can we move back below 88 today? But you don't want to sell into 88.10, which is daily support. So you want to try and sell at a higher level so that you've got time to manage your trade as it's moving back down to test daily support. All right. Price keeps going below 88.10 and then moving back above it. So you don't want to sell into it. Now the Aussie, this is the day chart look. We are above 67 at the moment. This range here, for the last maybe 3 weeks, we've been within that range just there. So only maybe had about a 200 pip move maximum for 3 weeks. So that range there. So yesterday and today, we're hitting the 79% level of that range. Slight daily chart uptrend within that range. All right, weekly trends are down, monthly trends down. This is just some form of correction at the moment. So can it move back below where it has really been failing out? This top here at 67.16. And really you want to, we want to see it move back below 67. Whilst it's above 67 and above that top here, there's every chance this could just keep having an underlying bid to move above. All right. It's a little bit tricky at the moment, the Aussie dollar. Early in the week, it put in a lower bottom, lower top, had this resistance area to start to move down. But of course, with yesterday's news, it's popped up. So it is giving you a 4-hour chart entry though there at the 79% FIB. All right, so if you like that area, all this price action coming up here is simply filled this very aggressive move there. So that aggressive move down to there, prices just come up to the starting point of that aggressive move down. So filled all the imbalances within that move. So now that I see that imbalance and I can see where we're failing, then I like this a lot better to trade back down the range. Very nice. Today, some of the pairs have traded above the FOMC spike up high, whereas the Aussie hasn't there. You can see it's failed. It couldn't get above. Nobody was prepared to be a buyer at the high or above today. So quite clear the sellers are sitting right up there and you're getting a 4-hour sell entry right now as I'm talking. So that may well just spend the rest of what is for the rest of the week, day and a half left. They just trade down for the rest of the week. But as we move into the new week, what we really want to see is 67 to be resistance. So last month's low is at 66.97, this olive line. So in terms of where the low of last month is, in terms of where we're trading right now, we're not making too much gain on the month before, all right? Rather weak, the Aussie dollar, in comparison to, say, the pound dollar and the US dollar and the euro dollar, sorry, that's been moving up up to the 79% levels of last month's range. This is barely above last month's low. So rather weak. So you just need to make your decision. Do you like selling at the 79% area? You could be putting your stop above here. And then you're waiting to see if it just starts to sell off and continues to move down. Quickly to the euro pound. Start of the week, Tuesday, I said, would you reverse back up from the range? We're obviously doing that. So your target is now up here at the top of the range if you're in. At the moment, I don't really like it. I don't like it when we see a range and we're in the middle of a range. So I'm not seeing a setup. You already need to be long by now. All right. And we were discussing a 4-hour entry yesterday. Well, there's one that presented. All right, but now that it's into the middle of the range, I wouldn't be looking for an entry at the moment. I would be watching to see if we can move up to the top of the range to weekly resistance here, 88.97, daily resistance at 89.25, and see if price fails up there to move back down. So we had day support here and weekly support. We came into that area, held to move up. Now you want to see if price will continue its move up to that area and then fail up there for a move down. You know, price can often fail in the middle of the range, so I don't want to be trying to trade it in the middle of the range. You need to be already in with the approach of trading from the bottom of the range to the top of the range. You're at break even by now. You've managed the trade and you're waiting to see if it can move to the top of the range. All right, there was an entry there yesterday. There was like a 62% retracement here. 4-hour entry was there. So that's giving you potentially a good 1 to 2 risk reward there. And you could be out of that trade now and then just, you know, moving on to something else. All right. Covered the euro yen. Still not breaking that trend line yet. Euro dollar. Now this 108.79 level, that's more my reference then. It's not recent price action. That's a monthly low from back over here. So that's what I'm referencing. You know, can price start to hold above that monthly low, or can it move back below? All right, so it's just for my reference there. We're kind of just sitting on it at the moment. So it's offering some kind of intraday support, but the area to really watch for failure is up here. But of course, if I'm short, I want it priced to move back below there, not to, you know, I didn't want to really say, but I am short this pair. I got short at 109. So I do want it to move below that level. So I took a bit of an aggressive stance and decided, okay, I think up here, we're potentially reversing, but don't let me sway you. If you need more information before you make a decision to short, then You need more information. Of course, I want to see this come down and fill this imbalance. All right, cover the pound pairs, New Zealand yen. This is the weekly range. Nothing's much changing. This is a weekly low within the range that we're maybe holding at. So if you are much more to the downside bias, where I've shown you before that we couldn't quite rally to the 62% level of that decline, we may be wanting to move this way long term. Currently, we did reject yesterday the 82.31 low here. Currently on the 4-hour chart, that's the rejection down of yesterday. Now I know that 4-hour trend's in an uptrend here, so my fib's going the opposite way, but that's a 79% failure back up inside the range of yesterday. Is it going to hold below that 82.31 level today? Very choppy in this area. It could go either way, but you can make a decision as to whether you want to try and trade down from that level or trade up from that level. I would be looking for a different pair, but I'm just discussing what level the market is currently referencing. It is last month's low from over here, which is a weekly low. So the market, like I was saying on the Aussie dollar, we're not too far away from last month's low. This is trying to hold below last month's low. And if it can hold below last month's low, there's still another week of trading. We could be trading down to the low of the month yet from that area. So to the 15-minute chart, let's just use the range of yesterday for the fib. We've hit the 79. We are starting to drift below. So, even if you sold it now and put the stop above yesterday's high, you wouldn't be risking too many pips for the potential of a large gain if we can break down through support. So, it's about a 42 pip risk for the potential of this, to move down. And can we challenge support down here? All right, so you can make your mind up whether you want to trade that or not. I think there are better opportunities maybe to look at than that, but just discussing what I'm seeing. Of course, that last month's low is the critical level that the market's trying to determine, can it trade below or back above. To the New Zealand dollar. Now, I put out on Telegram today, on YouTube, are we going to fail at 62.75? We keep holding there for countless weeks. We do have higher bottoms and a bit of a higher top forming through into that area, but is that uptrend going to be able to continue up, or are we simply going to hold at that level? You just need to make a decision. Or I'm not going to buy there because clearly that is resistance. For me to be a buyer, I would need to see price come above that level convincingly and then pull back to be support. We don't have that yet. So for me to buy is off the table. Longer term trend, weekly trend is down. This is just a bit of a correction up here at the moment. And the monthly trend is down. Like I've been saying today about last year's ranges, that's last year's range. We failed at the 62% level, fractionally above, failing at monthly resistance up here, sold down heavily in February. Just trading back up inside February's candle a little bit at the moment. But on the day chart there, we're actually at the 50% level as well. But we just seemingly can't get above, with any conviction, 62.75. Now there's a 4-hour candle entry. I took you through it yesterday. We stop above the high. Limited risk. We could trade all the way down to the lows of the month from this level. So limited risk, wouldn't be risking more than probably 40 pips there. I'm just eyeballing it, but not much more than, well, the entry is probably not much more than 20 pips. And there's about 190 down there. 200 pips. So risk reward of about 1 to 10, just to go down to the bottom if we can trade down to the bottom. So are we failing there? Now you can wait for more information. If you don't want to take the 4-hour trade entry, you could be looking to the 50-minute chart for weakness. We've already started to break the swing points. Swing points are breaking. Trend lines are breaking. Can't hold the FOMC spike top at the moment. So you need to make a decision. Do you want to short it or not? Or do you want to wait for some more weakness to come in? Now, I would prefer that we don't have these high bottoms here, because eventually we could just break through, but we could fail there. So it just depends what you want to see as a setup to trade down from that level. I would have preferred to see during the trading day that we came up and then just hit the area. I was looking at this whole area, all these 4-hour tops. I would have preferred price not to move through and to hit the area and reject nicely. We haven't had that, so I don't know if over time we will start to move through. But if we move back below the whole area that I've colored in, then of course that looks then weak. And slightly telling me that the DXY is starting to reverse. So let's move it to the 4-hour chart. Yeah, there's a 4-hour entry there on the 79% level. So we're getting some form of reversal there. Which is obviously going to help this New Zealand dollar trade down. All right, so dollar CAD. Now we're getting lots of lows down here. I said Tuesday, look down here for a trade to trade up on daily monthly support. Monthly support's at 136.64 from back in time over here. And of course, you've got all these tops here, which is a day support area here. Price doesn't want to go through. Draw a fib across the range. You can see a 79% level that we're holding at. There's a 4-hour entry there, very small candle for an entry, 79% fib retracement, sitting on top of 136.64 is as well. You can see it here, it's last month's high. So we're sitting on top of last month's high here. All right, countless days of sitting on top of last month's high. We don't want to go below last month's high. That's telling you something. I mean, if there's a strong support level there, last month's high, price wants to stay above it. Just like I was showing on the Aussie dollar, the inverse, we're just fractionally above last month's low on the Aussie. Here on the dollar Canadian, we can't get below last month's high. So it's the inverse, and this is showing a little bit more strength because it's not below last month's high, it's holding above. All right. So we may well be starting to hold here and move up. Slightly saying it's looking like a decreasing wedge. I'm not really that well up on wedges, so I'm not quite sure what you're exactly telling me. I don't use wedges as a tool. I can see here that it's kind of a triangle. I don't know if that's what you're talking about. Kind of that where we're holding at the bottom, and that last 4-hour high there's broken above the declining line. So this could well be getting ready to go that way. All right, so we shall see. At the end of the day, when you're looking for a trade setup, there's never a guarantee that trade's going to work. It's going to win, lose, or break even. You just have to decide you like the setup that you're seeing, and you take the trade. So it is holding there at the moment. All right, dollar franc, it's been moving up it was back here when we were talking, so it's moving up there. So I don't know if anybody took a trade down here, but you're already seeing profit. Dollar yen, this is in the area that I discussed on Tuesday, daily weekly support. Today we traded down almost to weekly support from over here, within a pip or two. Is this reversing down there? And as well, of this move up from that low, we're at a 62% area here. There's been a 4-hour trade entry there, the break of that red candle high. All right. Couldn't get down to 130.40. I think we missed it by like a pip. But 130.41 we came down to. So clearly the market's looking at that support level down there. Now, of course, it could be a short-lived support. We could break through. But right now, you know, we obviously had a very aggressive day with the FOMC yesterday, or early morning, late morning. Was it early morning? At the latter end of the day of trading for the day of Wednesday. And the market's absorbing the news. So the best thing you can do at the moment is understand the position of all these pairs and where they might be starting to hold at, so that as you move into the new trading day tomorrow, into the new week next week, then, you know, what are you going to trade? What is your setup to get in? All right. We're obviously at some key levels of pairs to the US dollar at key levels of resistance. Dollar to currency pairs, you know, dollar to currencies like the dollar CAD, dollar franc are at key levels of support. Dollar yen here is at key level of support. I mean, these levels could all break and not hold, but over the next, you know, 2-3 trading days, if we don't break below these levels or above these levels, then we could well be seeing a reversal back in line with maybe the US dollar picture here. You know, this US dollar picture at the moment, is this a dip? Is this a dip? From the weekly perspective, that's, you know, that's just gone, for those maybe coming in a bit late, the weekly chart here of the dollar index is coming down from a higher top just. So there is the question that that's moved up. This is a correction to the 79% level. And then we're going to move up, which is the inverse look of what we're seeing on the euro dollar. This is the exact look that we're seeing on the dollar franc. Similar look to what we're seeing on the dollar yen. All right. So if we do start to see, you know, we're having a nice week down this week, but if we have a week up next week, so we hold at the 79% level and go above the week of this week, next week, that's a reversal. And then we could be seeing a swing up like so. So over the next few trading days, it's just worth starting to monitor, is the support that we're starting to see today carrying on, you know, just going to go to my 482, just hold at the day chart there. We can see the reversal going on. You know, is that reversal going to continue? Do we trade up today there on the dollar index? Do we have a day up tomorrow? That in itself is going to give you a very strong suggestion that we're reversing from the 79% level. If we have a relatively positive day today with a wick on the bottom of the candle, could be a nice hammer, for example, pin bar, whatever you want to call it. Even better if it was a positive day, we break the high that day tomorrow, and then we could well be seeing a reversal, US dollar strength coming back in. We don't really have any US dollar news coming out, I don't think, now until tomorrow, until late Friday. So nothing really on the front, I don't think. We've got unemployment claims, but that probably won't do anything. So there's nothing really until US manufacturing and services PMI data down here tomorrow evening that can potentially, you know, really send it further down. It's obviously overextended from yesterday's news, so there's a high chance we're going to move back up. So just monitor the strength or weakness of that. Let's just have a look at gold to finish off. Gold on the monthly chart is still in a downtrend until it hits that double top. Not too dissimilar to what we're seeing on the euro dollar or the pound dollar in terms of getting all the way back up to a 79% retracement area. We're hitting some weekly levels up there. So we're pretty much at 79% retracement level right now on gold if we're going to put in the lower top there on the monthly. So the monthly is down until we take out that double top. The weekly is up. We're stuck between weekly support and weekly resistance up here. That weekly top, and the day trend is up. Now, if let's just say nothing much happens in the trading day today, and that candle finishes as it is, and then we have a day down tomorrow, that's going to confirm a lower top. So that will potentially confirm a reversal back down. All right, so if you start to see a lower top form at this 79% area, and we start to close below this level of weekly support, we could form a lower top for a decline from that area. So the trend is still up. As I've been saying, it's like on the likes of the euro dollar or the pound dollar, I don't want to buy at the top. If you're going to trade something to make profit on it, you want to trade in the discount area to be a buyer, to trade up and take profits at the expensive area. So hopefully everybody can see at the moment, from a historical picture of gold long term, this is the expensive area of gold, right? Now, this calls out, I saw somebody put on LinkedIn today, I think gold's going to 4,000. Well, you know what? It needs to get above 2,000 yet. All right. So I don't know if we're topping out here. All I know is we're at very expensive levels. Now, even in these swings where we've moved up, pulling back to here, but at least that was a discount level to where we're at right now. That's very expensive to be a buyer up there. Knowing just where the position of the market is, it's not the best place to be a buyer. So I will just monitor for it. Does it show an opportunity to sell? It's not presenting me with an opportunity to buy there. The only way it could have presented an opportunity to buy potentially would be to the 4-hour chart. There is an uptrend here now forming, but it would have to pull back on the 4-hour chart. And then, I could drop down to 50-minute chart, and that level there, that weekly level of support, which is last month's high, would need to hold the market. And then you could look for a tight entry to trade here. Other than that, to trade to the upside, I don't see an opportunity because we're at very high prices. This is where the buyers need to defend for price to move up. So that would be a level of support to watch for, price to hold at to move up, and that would be your buy opportunity in here. Other than that, for me, it just looks way too expensive up there. All right, any questions? Let's just have a quick click through, see what's going on. Aussie yen can't move back below 88.10 at the moment. All right, euro yen doesn't like it up there at 143. We could be putting the high of the day in there at the moment. Euro dollar, that monthly level 108.79 isn't getting broken down below yet. But over the next 24 hours, if we start to want to just hold below 109, you may well start to see 109 to be resistance. We've clearly held at that day chart resistance and the 79% fib of the large range. Then we want to see obvious reference points breaking down. So we've tried to move above 109. We're below it at the moment. What we'd like to see now is 109 not wanting to be broken back above. We can start to see 109 being tested and held. I mean, yesterday in the volatility of the FOMC statement, we did spike above 109, but then we couldn't hold 109. And that was obviously when there was lots of trading going on. So as we've been moving up through Asia, we got above 109, but into the London session saying, okay, guys, we weren't going to hold above then in New York. And at the moment now they're saying we're not going to hold above there in London today either. So, I mean, it could come back up to there in New York, but of course, yesterday in New York, traders wanted to defend 109. So you might start to see 109 being defended over the next trading days. And we could at least see it move down to 108. 108 could be support at the moment. Pound dollar. Not much going on. I don't think much is going to happen to the pound dollar till the interest rate decision. New Zealand yen. So I would much prefer to look at something else. It's still holding above that level at the moment. Not wanting to break back below, but you may see, if you see weakness up here, could be a good area to sell at around about the 79% level to move back below support there. All right, New Zealand dollar. That's why the New Zealand yen's going up, because New Zealand dollar is still, the buyers are still a little bit in control here at the moment. We're at the high of the week. All right, still lower tops and bottoms on the 15-minute, but it's not easy going just there at the moment. There's a definite tussle there between the buyers and the sellers. Can we get above that resistance area or not? As I said, I would much prefer to see a nice run up and a big heavy spike down. We're not getting that today. So, the spike down that we got here, we're not getting that today at the moment. All right, dollar CAD's holding its support still. Dollar franc. This looks like it's going up, the dollar franc, in general terms. All right, dollar yen. Dollar yen may still come back down for another sniff at 130.40 down here. Just give it some trading days. This 4-hour chart trend is still down, but we're definitely on support there. Just monitor these levels to see where we start getting US dollar strength coming in. All right, slide S&P 500. Covered that before. It's at the 79% level of the day chart. Had a nice outside candle from the 79% level, as my lines would suggest. Playing at 79, we could be going down. Had a nice outside down candle yesterday. So if we have another day down today, break the low yesterday, then I would say maybe we're just going to continue down. All right. All right, everybody. Thanks very much. Any final questions, just type in. Give you a heads up for next week. Next week on the webinar front, Tuesday, more market analysis. We'll see how the market's been trading at those levels we're discussing tonight. Are we seeing a reversal or not from those such extreme levels? So Tuesday the 20, hang on a minute, 23rd. Got some data missing here. Or am I? No, I think I'm mistaken. Hang on, let me have a look at my calendar. All right, so Tuesday is the 28th. We're already at the 28th next Tuesday. I thought we had another week to go. The month's been moving along way too quick. I mean, it's only the 23rd today, but of course, moving into next week on Tuesday is the 28th. All right. Then on Wednesday, I'm going to take you through the 100 pip trade entry, which I like to use at extreme levels, and more analysis next Thursday. Looking at my chats, David, thank you. Slavy saying you won't be here next week because you're too busy living up on a yacht trip along the New South Wales coast. We'll have a nice trip. You can always trade on your phone. All right, Slava, you have a nice time. Hopefully the weather's good for you. Take the seasick tablets with you. I'll never go without them. All right, everybody, thanks very much for joining me this evening, and have a great weekend. Look forward to seeing you next week if you've got the time. Thank you.